Hey investors, it's already Feb 2021. For the last 2 years, every month I have been chronicling my portfolio as we journey towards $1 million. We started from humble beginnings, but we're almost one-third there right now. This portfolio is a significant part of my net worth. I spend most of the day, every day, just reading up about stocks and trying to make good investments. This portfolio means a lot to me because it is almost like my full-time job. Unlike other YouTubers who show their portfolio, I don't have much of income through YouTube. So I'm depending mainly on growth in this portfolio to increase my net worth. That means I try to make responsible long-term decisions for myself. And if along the way, as I try to make good investments for myself that can help you as an investor or a viewer, that is all the better. Of course, you make your own financial decisions given your own circumstances. And nothing I say should be financial advice, ever. Having said that, there are a few interesting things to talk about. So let's get into this update. So this is how the portfolio looks like. My top 13 positions make up about 78% of the portfolio. So it's quite a concentrated portfolio. I'm betting heavily on these 13 stocks. I think some of these stocks are due for a rebound like Visa, MasterCard, and Booking Holdings. And I expect them to do well, especially in the second half of the year when the economies around the world open up and travel around the world opens up. Facebook just reported its Q4 earnings for last year, and I thought it did very well. It delivered about 30+% in revenue growth, despite being a 700 billion juggernaut. Those are very good growth rates for a company of its size. But I think there was some concern among investors about the potential implications of an iOS update for iPhone 12. I think generally Facebook and its management tends to be conservative in their guidance. So although there may be some headwinds in terms of advertising revenue, I think if there's any company that can manage those headwinds, I think it's Facebook and Mark Zuckerberg and his team. So earnings growth might be more tepid, especially in the second half of the year. But Facebook has such a strong moat, such a powerful network effect that I still plan to hold it for the long term. Let's take a look at some of the other stocks we own. So the ones in red are ETFs. So this is the triple Q ETF. Some of my stocks had massive runs in January. Teladoc did very well, and so did Baozun and Beyond Meat. I think Baozun went up 35% in one single day. That also goes to show why it's so important to hold these stocks long term, because all the returns can come in one day, suddenly. I think Teladoc, Baozun and Beyond Meat were shorted a little by some hedge funds. So given the whole frenzy over GameStop, I think that's what led to some of the rise in these stocks. But nonetheless, they are very strong companies. They are not a GameStop. They are strong companies in their own right. So I expect them to continue to do well. Speaking about GameStop, I missed the whole GameStop rise. I should have paid more attention to the fact that it was so heavily shorted. I did watch a few videos from some good investors who were actively holding GameStop few months back, like Ishfaq, Pirelli, and another investor on eToro, Samosa King. At that time, the logic was that it was a cigar butt investment. Basically, it had more cash than what it was selling for, and it had the potential to generate some cash flow, at least for the next few years. I thought maybe it could go up 20, 30, 40%. So I skipped on it because that's not my usual style of investing in high quality companies. But given how significantly it has risen and looking at the short squeeze that has propelled it to such great heights, I feel it was a wasted opportunity. So when I see a stock being shorted excessively the next time, I'm going to consider buying that stock, even if I feel it's not of such a high quality. I will be careful though to ensure that it's not a stock that is likely to go bankrupt. Now that I've missed the GameStop rally, what I'm looking at is to perhaps buy put options because I'm sure the GameStop rally will fizzle out. So if I'm buying a put option, I'm basically betting that the stock will fall, but I have limited risk. So I have put some limit orders. I've set a certain price for those put options, and if they get activated, that'll be good. Let's take a look at some of the other stocks we hold. So I got assigned some Carnival shares, but I managed to sell a call option on this. So I managed to recover some of the cash that I invested into this stock. You can take a look at the other stocks over here. So as discussed in the previous videos, I've changed my strategy a little in that I'm ready to bet small amounts on some speculative companies. Companies that I'm not so sure about or that I feel are trading at high valuations. Companies like American Well, Zoom, CrowdStrike, Peloton, Virgin Galactic, and so on. There are other stocks as well that I'm getting interested in like Intel and IBM, but these are because they seem very cheap. But I'm making small bets on them at first as I learn more about them. You can see that Bitcoin is also part of this speculative part of the portfolio. I'm not so keen generally on Bitcoin. I can't buy Bitcoin directly, so I have to go through this Grayscale Trust, and they apparently hold Bitcoin at a premium, so it's not that good of an investment. But if I could buy a cryptocurrency directly, I would probably buy Ethereum, and I've in fact bought some Ethereum for my eToro fund. And I'm looking at Ethereum more carefully, and I think that it has some utility that Bitcoin does not have. So this will probably make it more valuable in the long term to me. I'm studying it further. I'm also looking at some of the so-called Ethereum killers like Cardano and Polkadot, but they still don't seem to have as strong a network effect as Ethereum. There's a lot of intellectual capital that's going into the Ethereum network and into the decentralized applications that are gaining traction on the Ethereum network. And I find that very interesting and also attractive as an investment. So if Ethereum dips a lot, I might buy it through the Grayscale Trust on Ethereum, even if I have to buy it at a premium. So let's see how that goes. And you can look at some of the other speculative positions like NEO, Invite, and Pacific Bioscience. Pacific Bioscience is similar to Illumina, but it focuses on long read sequencing, whereas Illumina focuses more on short read sequencing. So far for 2021, we are down a little for the year, but I think there's still a lot of potential in this portfolio. Some of my main holdings are still very cheap in my eyes, like Google, Facebook, Alibaba. Amazon is going to report earnings soon, and like I mentioned, some of the other stocks are due for rebound, at least in the second part of the year. So I still think the portfolio is positioned to do well this year. Probably it could do about 5 to 20% in returns. Let's see how it goes. So this is what we did for the last month. I got those Carnival shares assigned, as I mentioned. I sold off the Under Armour shares that had been assigned earlier. Bought some Adobe, IBM, Intel, Invite. I sold this Space Virgin Galactic put option for a minor amount. I sold the Carnival call option for 450, and that's pretty much what I did. So in terms of the options we have open, these are the option contracts we have. Most of them are put options except the call that I sold on Carnival. This is a covered call, so it's not very risky. So right now, Carnival is about $18-19. So I get the profits all the way up to $25, and anything after $25 I don't get. But I think that's perfectly fine with me. So in terms of the monthly comparison, this is how it is. We compare against the S&P 500, the Triple Q ETF, Berkshire Focus Fund, Barron Fifth Avenue Fund, the ARC Innovation Fund, and the Scottish Mortgage Investment Trust. These are, in my opinion, the best ETFs and the best fund managers out there. So it's still very early days. The S&P 500 looks like it's down about 1.02%. The Nasdaq is around there. The Scottish Mortgage Investment Trust has done about 3.79% so far, so they're off to a good start. And the ARC Innovation Trust by Cathy Wood is carrying on the great momentum it had from last year, and is up another 12% so far this year. So I think this is probably because some of the outsized position it has in Tesla, and Tesla has been doing well in the last month. But it just doesn't make sense to me to own Tesla at the current valuation. So I probably will skip on Tesla for now. But it'll be interesting to see how these funds compare against my portfolio for the rest of the year. Let me know how you found this video. Let me know if there are other things you would like me to discuss. And have a great day.